In our final trade of the day, joining me now is Todd Baba Horwitz. He's taking a look at the oil market. It's been a very serious situation to the south of us. So what do you see happening here?
Well, you know, we didn't get much reaction on oil last week when all this was happening. Oil continued to work lower, which I do believe is going to be the case, is we're going to continue to see lower prices. However, I think that we've already seen a lot of these oil stocks beaten down into oblivion already, and I think this is the time you probably want to look, and it's probably some opportunity to buy some of these down here. And what I'm looking at is Apache, APA, Alpha Papa Alpha. It was up as high as in the mid 50s. Actually, it's been in the 90s at one time, but recently it was in the 50s. Now it's at 39.40. I think this is a great opportunity to step in here. I think one thing we know for sure is that typically markets get overdone on one side or the other, and I think that Apache has been well overdone to the downside. I think the $40 level is a great spot to step in, either as a stock ownership or using an option trade. I'm personally going to use a ratio call spread to go ahead and buy into here so that if it does fail, that at least I won't lose any money.
Why do you think we're seeing this odd situation happening with oil? Traditionally, when you have a hurricane, you see oil stocks go up, because all of a sudden there's issues that could arise with supply and demand.
I think what we've seen here is that all of the manipulation we've seen with oil for the last year now. If we go back a year ago, this is when Saudi Arabia, they started talking about their new Aramco IPO that they're going to come out with. We really don't have a need for oil in this country anymore. We have the United States, without affecting any of the environment, has a 200-year supply waiting, and that's at current usage. Now we know that we get better with fuel economy all the time. We know we get better with using less, plus the fact that we're looking at natural gas, we're looking at solar. So there's a lot of replacements here. So I don't think you're going to see that. And what we have now is the frackers, every time we get near 50, they go out and pump it out and sell futures, because that's their money where they make money. So that's why there's not as much exposure to oil anymore.
Let's talk about another sector, the biotechs. You're also eyeing that sector as well.
Well, I'm actually looking to sell biotechs. I mean, XBI, which is the Biotech ETF, it's just made a brand new high. Again, it's been built on a lot of excitement. We're seeing markets that have no fear. We're seeing markets that just continue to go higher. It doesn't matter what Korea does. It doesn't matter what anything goes on. They want to go higher. In the meantime, I think this has been well overdone. This has come up from the 70s all the way now, trading in the mid 80s. To me, that's a great spot to take a stab from the short side, and using the opposite strategy. I'm going to do this only with options, and it's going to be basically a ratio put spread to the downside, looking for it to break. And again, one thing about the ratio spreads, if you do them properly, if the markets go directly against you, you don't lose much or you don't lose at all. But if they go your way, you get a chance to make a lot.
Well, thank you for the Trader Talk today.
Thank you.